Welcome so much, everybody, for coming to the webinar. I'm really excited to be have released this paper last week and to have a really great discussion today. I'll give a quick introduction for our panel. Will, can you move to the next slide? So I'm Matt Darling, the Senior Employment Policy Fellow at the Niskanen Center. At the last year and a half, I've been thinking a lot about UI reform, in addition to other questions of employment policy. UI reform has always been sort of one of the central things that I've been really sort of interested in, and really got me to move here. I was working as a contractor for the Department of Labor during COVID. I got sort of when COVID hit and there's a lot of really, big questions and answers about UI, I got sort of very, very engaged with what's going on in the policy process, and then started thinking really deeply about, what we can do to improve it. And fortunately, the Niskanen Center was looking to hire someone to do that. So me and Will have been working on that the last year. We're joined today by two fantastic guests. So Jennifer Pahlka, so the founder of Code for America and the recent author of Recoding America: Why Government's Failing in a Digital Age, which is a fantastic book. Came out like a month ago, and after we had basically completed the draft of our paper, and I kept being like, oh man, there's so many things that I wanted to cite in this paper that Jen had just so well described in her book, and it was just fantastic read. I really strongly recommend. And then Chris Pope, who's at the Manhattan Institute, and Chris Pope also has done a lot of work on unemployment insurance reform, and actually released a paper that has some similarities with it's both thematic and procedural with some things that we're going to be discussing, but also a lot of differences. And so I thought it would be a really great panelist to sort of talk and give a contrasting view, but also a sympathetic one. And then finally, my colleague Will. Will's been with me at the Niskanen Center working on this report as a co-author of it. And I'm going to turn over to him. He'll sort of give a quick overview. So the plan is for Will to give an overview of the paper. We're hoping that this is going to take 15 minutes. We're not going to bore you with the details or anything like that. After which I'll moderate. I've got questions for Will. I've got questions for Chris and Jen. But then I'll turn over things to the audience. So of course, feel free. Everyone knows how Zoom works, so there's a question and answer box at the bottom. As you have questions, feel free to enter them, and then as we get towards the end, I'll start handing some of the questions over to you. Over to you, Will.
Thanks for the intro, Matt. Before I go through the presentation, I want to just start off with my own personal experience with UI programs, which, like millions of other people early in the pandemic, I was unemployed, and it was my first real experience needing to apply for unemployment benefits, which it was nerve-wracking, not something I had done before, just being earlier in my career. And there's kind of real positives and negatives that I saw with kind of the reforms that were passed early on when the pandemic hit. One, the positives were that my income level remains stable from between the jobs that I had held. So I was out of work starting mid-April 2020, and then the next job I got was mid-August 2020. That whole time, income level remained stable because of the benefit top-up that Congress had passed. And then there was also the downsides, which were also some of the reasons why Congress had to act in the moment, which the actual site that I needed to access benefits on, which was through the New Hampshire state website, it was very outdated looking. It was similar quality as my high school directory, which is 20 years old at this point. Very hard to maneuver. My benefits got kind of snagged up because I had filled in a kind of a fill in the blank answer in the questionnaire, which it turns out that I didn't need to do, but I didn't realize that until 3-4 weeks later. And kind of once that was resolved, it was smoothed out. But kind of the bottom line being that there were some real positives to the top-ups that were passed in the pandemic, and really big chronic issues that a lot of the state programs have been dealing with that still have not been resolved at this point. So going into the presentation itself, sorry, one second. Okay. So the importance of reform, we want to make sure that the UI system is updated, modernized, and improved so that American workers are well positioned against all sorts of economic shocks. So pandemics, trade disputes, wars, automation, AI, and honestly, just ordinary churn that workers are dealing with month to month, week to week at this point in time. So we kind of broke the problems down into 3 sections: assistance, access, and activation. Which assistance we describe as the benefits that claimants get. They're not sufficient enough to support actually paying someone's bills when they're looking for a new job, and that kind of prevents them from finding jobs that match their skill level. 2, with access, it's the system is not ensuring that people who lose their job are reliably able to access their benefits, and then the systems are not good enough at stopping fraudulent claims. And then 3, with activation, actually, like the encouragement that the system has in place to try and help claimants get into those new jobs in an efficient manner, it's actually not that efficient at doing so. So going more into detail on the problems with assistance, kind of the top line issues are that meager unemployment benefits make it difficult to cover expenses while out of work, which then makes it difficult to take the time to find quality jobs that actually suit someone's skills. And then lastly, the fact that the benefits are so small, it actually is impeding families from adopting different arrangements that they would actually like to have. So the example we went with is, like, if you're a couple and with a young child, you may want one of the parents to actually be at home with them in their earliest years, and the fact that the system does not provide sufficient enough benefits makes it too risky to rely on a single income. Which that can be, let me just move our images. Matt, do you know how to minimize that? Maybe I'll just go like this.
Yeah, just keep going with it.
So actually going into the cost breakdown that a family of 3 would be dealing with. So in this scenario, it's 1 worker, 1 caretaker, and 1 child. You're seeing that the key expenses that we focus on the paper are housing, transportation, food, healthcare, and utilities, which ends up being about 65% of that family's expenses. And the average replacement rate for UI benefits that a worker can expect across the country is about 40%. So the programs are falling short at actually meeting families' needs when between jobs in order to sustain their consistent expenses that they really need to be paying on a consistent basis. And as a result, it makes it hard to actually look adequately for good jobs and for families to adopt arrangements that they'd like. So the solutions that we suggest broadly are setting higher minimum weekly benefits, increasing those replacement rates overall, improving the maximum weekly benefit amounts, because a lot of states have benefit caps that actually make it hard for middle-class workers to have enough of their income replaced. And then lastly, extending the duration of regular benefits. Moving to the next section for access, to kind of summarize the major issues, it's that there's kind of complicated and uncoordinated state benefit administration, and that results in a lot of people who are qualified for benefits having difficulty receiving them. Computer code that can't be easily modified, which a great example is early pandemic. The reason why there's a $600 top up for all the applicants was because doing a percentage increase was just too difficult to code. They went with the flat number. And then lastly, it's very difficult to stop a lot of fraud. During the pandemic, there was a lot of fraudulent dollars sent out because of stolen identities, as well as submissions in multiple states, which, as you can see in the figure, at least for a lot of the fraud that was reported through early spring of last year, most of that fraud that was occurring with the pandemic programs was through multi-state claimants. The primary reason for that is that the states are not communicating with each other enough, and there's not enough usage of national data to actually identify when specific individuals are claiming benefits in multiple states, although it is improving. So the solutions that we suggest are standardizing the benefit calculation rules across states to simplify administration, more adequate staffing levels with relevant expertise, and use of national data platforms to verify claims, which Jen will go more into this in the discussion section to really talk about some of the examples of success, like New Jersey, where they've been implementing a lot of good improvements. And then going into that last section, the problems which for activation, which the current approach to activation is very reliant on weekly search requirements, which the way this kind of works is for an applicant, you need to log into the state system or the state website. You need to say you've applied for X number of jobs and where, and you need to do this every week in order to actually get credit and be qualifying and receiving that week's benefits, which it seems like a minor thing to have to do week to week, but I think Matt has put it best, where it's like, imagine needing to kind of fill out your tax claim every week. It'd be really frustrating to have to do that, and the issue with it is it's not effective enough at actually getting people into jobs in a faster manner. And then secondly, there's too little invested in reemployment programs that are really giving more direct assistance to claimants. So going to the next slide, we can see with some of the bigger randomized control trials that have been done in states that there's really not enough of an impact seen by those work search requirements that are mandated week to week. You can see that the actual difference in workers that are or claimants that are in jobs within a year of receiving benefits, it's very comparable when looking at recipients in Washington State and in Maryland. And so we need to really go beyond just more superficial requirements and think a bit more comprehensively about what is best for workers and will help them get into good jobs. Secondly, looking at how we can spend more on reemployment programs. Another phrasing that's used a lot is active labor market policies. So vocational trainings being an example of that. But as you see over time, the spending that the US has actually dedicated to these kinds of programs as a percentage of the national GDP, it's gone down. So we need to reverse that trend, and we need to make sure that we're actually experimenting with more modern programs that are going to help workers in the current economy. And that investment needs to start happening now. So the solutions for activation, what we recommend is that benefits should not be contingent on a weekly paper trail. There needs to be a replacement of those kinds of work search requirements with a more forward-looking approach. So more job search planning that is looking ahead for the next several months, some automated accountability follow-ups, so kind of notifications that are going to be sent to recipients just to remind them to be thinking about certain kinds of search things, setting up different kinds of conversations with advisors that could help with a search and so on. And then as you kind of progress, or as workers progress a bit further into their unemployment spell, actually providing consistent counseling to have more hands-on assistance with finding that next job. And then lastly, making sure that there's better funding for those kinds of active labor market programs that are really giving additional training and assistance to get workers into good jobs. So all of this is to say that the UI system that we have in place now, it is not functioning anywhere near its full potential. And until there are like serious reforms to the system, workers and the US in general is not going to be well positioned for all sorts of economic shocks, and workers will not be protected and set up for success and even ordinary churn in the labor market. So that's the end of the presentation. Next, I want to hand it back to Matt so we can kind of go into the discussion section and get into a bit more of the nitty-gritty details for various issues.
Awesome. Thanks so much, Will. So yeah, as I said earlier, please feel free. I'll be monitoring the questions and answer section for anyone who wants to add a question. I've got questions of my own for the panelists and to talk about, and I'm hoping we have a good discussion. And so please feel free to add in. So I'll start off with a question for Jen. So Jen,
Matt, 1 second.
Oh yeah.
Do you know how to get people's the panel back up?
It's up for me.
Oh, okay.
If you just unshare your screen, I think that might be
okay.
Yeah. Oh, thanks. So yeah, my first question was for Jen, and Jen, you were sort of on the front lines with a lot of these issues in the pandemic in California. I was wondering if you could tell us some of your war stories from that period, and how that really affects how you think about like UI and other sort of systems reforms broadly.
Well, I hope not to take the whole hour on horror stories, but appreciate the chance to set it up. I had the privilege of co-chairing a strike team, as he called it. We'll call it a task force that Governor Newsom appointed to help clear the backlog in California. So we got pulled together, I think, at the end of July 2020. So you can all remember what it was like in July 2020 with this stuff. And had a fantastic team go on the ground and really look at this problem from the bottom up. And I think the first thing that we were trying to articulate to the community watching this was everyone thinks there's a UI system, and we're the tech people, so they think there's a tech system. There's not a tech system in California, and I think this is largely true in other states. There's these sort of archaeological layers of technology that map back to the decades starting in the 1980s that have not been architected as a thing that will work to deliver unemployment insurance. They are what the department believed it needed that decade and took 2 to 3 decades to build and deliver in that decade. In fact, you have that missing decade in 2000 when they did their first attempt to go online that failed, and they started again when we got UI online. But I think that, there's this perception that there's a system, and we were trying to help people understand it's not a system of the kind you would be used to. Those layers don't work well together, and they're very fragile. But they are archaeological tech layers that map to archaeological policy layers that go back much further than 1980. And have, accrued and sort of accreted over the years in ways that make it very, very difficult to deliver this benefit. I'll tell just 2 quick anecdotes. One is on the policy complexity side, that my colleague Marina was talking with one of the claims processors over the course of a couple of weeks. And this particular guy kept saying to her, "Oh, I'm not sure of the answer to your question. I'm new here. I'm the new guy." And when she finally turned to him and said, "How long have you been here?" He said, "I've only been here 17 years. And the folks who really know how this works have been here 25 years or longer, because there's so much complexity to policy, law, regulation, process, procedure that govern this in any state. But the other quick story is that when the legislature was grilling the director of the EDD, this was sort of happened, I think, the day before we started our strike team. One of the things they were asking them about was a modernization that had been in the works for, at that point, 12 years, BSM, a business system modernization that EDD had been working on, pulling all of the requirements together for, that was just about to hit the street when the pandemic hit. And when they hear, wait, you've been developing this for 12 years and you've just put it out with the expectation that once it's awarded to a contractor, it will take another 11 years to deliver. You definitely have a problem with, I think, the way that we are trying to modernize any kind of technology in government. But I think that you have legislators that are not grappling with that policy complexity that's making it take 12 years, and B, all of the policies and procedures that that contribute across both technology and policy to something that is so burdensome to administer that it's going to be incredibly burdensome on the user.
Thanks so much, and I appreciate you sticking to 2 anecdotes. I know you've got a lot more. Chris, I'll turn it over to you. So Jen was talking earlier about, the policy complexities within California, and then she said something like, "Oh yeah, it's probably very similar in other states." But like one thing that we have not, it's not just there's no UI system, as Jen was saying, but also there is not 53 UI systems, in that we have 53 states, territories that are also running different UI systems. That, to some extent are somewhat compatible. And you've written a lot about sort of how the federal and state sort of things have interacted, especially with, as often happens and happened in the COVID pandemic, the federal government, paying for a lot of, temporary benefit expansions. Could you talk about that a little bit?
Well, I think the most striking thing to me about unemployment insurance, and I say this as someone who comes from the world of healthcare policy, is that in healthcare, we have constant changes. Like every year, there's a Medicare payment change, there's Medicaid reform, there's an insurance reform, there's 1,000 things, there's newsletters, there's a whole institution oriented around this. And yet, when you look at unemployment insurance, you kind of look at the text of the Social Security Act from the 1930s, and basically the system at the federal level that we still have. Now, obviously, it's changed enormously at the state level, but all the variation is kind of under the hood of this one system. But I think that means that we've sort of been trapped in the politics of the 1930s a little bit with our unemployment insurance system. They're a very different world. The labor force has changed, the economy has changed, the concerns of Congress. The Jim Crow South was in charge of the congressional committees in the 1930s. There was a big reason for the state role to be as dominant as it was when the system was created. They could never have created a national system at the time. And so it's very strange to me that there hasn't been more movement. Maybe not so strange. I think there's a weird dynamic with unemployment insurance as well, which is that no one wants to talk about unemployment insurance in good times, in growth times. And then, but strangely, when you have a recession, you have the most incredible policy innovation. So you have like the pandemic unemployment, $600 a week bonus that was created that no one saw coming 2 months before it happened. And so there is this great opportunity on this policy area for really kind of getting ahead of the curve and having some plans that are ready to go. And the state-federal divide, I think, is one of the big challenges here. It's something we would never create today, and that really bears no scrutiny. And I think no matter really of your politics, you can do a lot better, I think, than what we've found ourselves with.
Matt, can I add on to that?
Yeah.
I think Chris is exactly right. And I think that this dialogue that, every governor was adopting at the beginning of the pandemic when these backlogs were accruing about COBOL, like the system doesn't work because there's COBOL code in the computer systems that run this, is an absolute red herring. I mean, it's not that they're great systems and that we should love them. They're terrible systems. But the issues that Chris is bringing up are the issues that you need to fix if you're going to fix the system, and the tech will follow. So we really I think, hurt ourselves in a certain sense by giving the public and elected leaders something to talk about that's not their fault, or at least they don't think it's their fault. And we've got to shift the conversation.
Right. If we went and, especially ChatGPT is pretty good at this and said, okay, take all this COBOL code, make it into JavaScript, so you can hire, a lot more liquid labor market for JavaScript folks, instead of like finding the 8 COBOL programmers that are still doing that. We'd still have the architecture and the incompatibility of the different systems that you've highlighted. Yeah. No, I mean, and the other thing is like, one thing that, adding on to some of the stuff that Chris said, that I've been fascinated, like looking at sort of the state evolutions and stuff like that, because sometimes you'll find these interesting things with different, how a state benefit program works, and you're like, oh, when did they do this? And you can't figure out what it is, because you can find these debates sometimes at the national level, but I'm sure this is written up at something, but it's just so hard to kind of do that deep dive into and figure out, okay, like, why did you add a child dependent bonus to UI at some point in the past? So continue. So we've been talking about things that went wrong during the pandemic. Maybe talk a little bit about what went well. So back to Will. It was, I can't even track time. There's so many good reports that came over this week, but this week the new poverty estimates came out, and I know you've been thinking a lot about how that sort of relates to UI. Could you talk a little bit about how the benefits surge in 2020, 2021 affected families' budgets, and as well as sort of things like the national poverty rate?
Yeah, so I mean, I gave my own personal anecdote, kind of how it was for me. It was very similar, I think, for plenty of other people, where unlike many of the years leading up to the pandemic, you actually had a very good percentage of your income being replaced if you were unemployed, especially in 2020, not quite as good in 2021, but a much better replacement rate than you would have seen in basically any other year. So that really allowed people the time to search and find kind of well-suited jobs for them, much better matching. And kind of in terms of the poverty rate in general, UI definitely had a very sizable impact on that. What is kind of missing from that conversation is that I think the census numbers are missing some of how those programs were actually helping Americans, which there's been subsequent research since some of these estimates have come out from the census that show that using IRS data, the census numbers have very much underestimated the amount of benefits that went to lower income workers. And when you factor that in, you're seeing potentially is almost 2 times the poverty reduction when you're kind of incorporating that information in than what the census has reflected. Which this is all to say that despite all of the administrative issues with these programs, propping them up very quickly, they were very much life-saving for American families, and I think it needs to be the major recollection from these couple years of just how impactful they were.
Thanks so much, Will. Turn to another side of it. Chris, I was wondering if you could talk a little bit about some of the eligibility changes that happened. And this is something that we didn't end up really covering in our paper, but like I know you've written a little bit about who's eligible for UI and maybe how that should change as we look towards doing reforms.
Yeah, so I mean the unemployment insurance system traditionally, has really been operated through the payroll tax, funded through the payroll tax through contributions. And this obviously began with an assumption that you have to have a regular employment relationship. And also the way the program is because of that sort of defined by the payroll tax. So it leaves out farmers, it leaves out the self-employed, which It leaves out gig workers. And it sort of has the 1930s sort of structure of a workforce that it's thinking of. Now, I think that that's completely understandable. I think the UI system is defined, I think, at its core by a very, very difficult task. And it's managing a really big moral hazard problem, which is at its essence, the system is paying people who don't work, who are able-bodied. And that obviously creates, you immediately want to deal with the risk that you're paying people to not work and causing them to drop out of the labor force. This is the elephant in the room with all UI discussions. And the shape of the benefit, I think, is really, to a large extent, and all its flaws and all its shortcomings are defined by the particular tools that are used to mitigate that moral hazard problem. So what we have is we have the restriction on the eligibility that keeps out people with irregular work arrangements, basically because you don't want people sort of out of the labor force claiming benefits. You have the fact that benefits are proportioned to prior wages, because if you gave a flat benefit, you would be paying people, low wage workers, more than they previously would have earned, and high wage workers much less than they need to stabilize their income. And then you have the issue, then you have the issues that are really associated with like time limits on eligibility. So we have 26 weeks and then extended in recession based on alternative employment arrangements. So the entire nature of the benefit is really determined by attempting to mitigate this moral hazard. So my view, and I've written about this, is if there are other ways that we can mitigate moral hazard, more effective ways, more targeted ways of mitigating the moral hazard, then we can actually expand the scope of the eligibility for the benefit, the gig workers, to the self-employed, basically to people who need it most. Because if you think about whose incomes are the most unstable, it's actually irregularly employed people. It's people who don't have stable employment arrangements. And so if we can find an alternative way to mitigate moral hazard, then we can start being broader about eligibility. One point, and I think it relates to something that Will said earlier, is I think there's a sense in which the pandemic was an exceptional circumstance, in the sense that the moral hazard problem associated with the pandemic was much, much less than it usually is. Nobody was at risk of dropping out of the labor force because they saw the pandemic coming and wanted to claim the $600 a week. And so you could do things on a one-time extraordinary basis that you would never do on a permanent basis. So there's a sense in which we could probably be way more generous with the pandemic benefit than we would with an across-the-board UI benefit in ordinary times.
Absolutely. And I know, that was one of the things that I remember sort of got me very passionate into this field is people saying, oh, like people are going to see this. I'm like, no, people understand that this is a temporary benefit. And there's a real-time option value to working. One thing I'll sort of add, we didn't talk about this too much, but I'll share my screen briefly. But like, this is a figure from our paper. Can everyone see that? But like, this is basically looking at UI generosity. How much of your income does it replace? And you can see the United States here in orange at 45, 43% here. And then you can see activation strictness, which is basically how much do you really, what kind of efforts do you take to push people into the workforce? Now this is it's rated on like a 5-point scale out of lots of things. You can quibble with what the numbers actually mean, but I do think that sort of intuition of like the way the United States works right now is we have, out of the OECD, maybe I think the looks like the 5th least generous benefits, and then the 3rd least strict activation policy. So right now, our entire, how do we get people out of unemployment insurance is we just don't pay them very much so that they have to go get good jobs. And I do think that sometimes people really do identify these sorts of issues that you brought up, like, oh, it'd be really nice if that, as Chris said, as Will said, if we could give people a little bit more higher replacement, but then you do have to deal with that moral hazard problem of how do you, make sure that they do sort of go back into the workforce. And that does take either something like stricter activation policy, sort of more forward-thinking things, or something like you said, like, maybe just, you can be very generous for a shorter amount of time, after which you don't have to worry as much. Thanks so much. So let's move on and talk about some of the potential reforms that could be happening in addition to stuff that we've been talking about in our paper. But one thing I've been thinking about it is what's been moving on this. Everyone, especially the fraud issue, says the GAO dropped the report yesterday that had, I think probably, there's lots of different estimates that have come out here, but I think this is probably the one that I think I found sort of the most statistically rigorous and compelling. But they said, okay, probably about, I think it was like $130 billion of UI that went out was fraudulent, went to fraudulent actors. And to give sense of that to people, because 130 billion, it's a lot of money. It's hard to wrap your head around. That's about 7% of total UI spending over that period of time. I know, again, that's one estimate. I think it's one of the more compelling ones that I've seen come out there. But it still has, there's ones that are smaller, there's ones that are larger. But Will, I was wondering, could you talk a little bit about how Congress is reacting to this news, as well as some of the earlier estimates of fraud?
Yeah, so I think the range, just for more info on the GAO report, I believe they are estimating between 100 to 135 billion. Which to add on to the set of questions, it looks like Adam Benjamin asked if we were writing the paper today, how would that report kind of influence the paper if we would change anything? Which I would say yes. We were like, as we're finishing the draft and everything else, we probably would have added even more about fraud and just kind of improving that kind of systemic issue. But in terms of the recent policy changes, I think the defining reform for this Congress right now has been to actually reclaim $1 billion of ARPA funds that was set to be used for anti-fraud measures, modernization improvements, the Tiger teams that the DOL has been sending out to states to help implement kind of beneficial changes with their systems. That $1 billion has been taken away, and so far there have not been other reforms actually implemented this year. Where there has been at least proposals suggested has been about trying to prevent similar kinds of fraud in the future, kind of paying states to investigate potential fraud, as well as trying to encourage states to opt into more of these national data sharing systems, which I think it's important to emphasize that some of these measures, they have to be mandated federally. I think if you really want a coordinated national response to prevent fraud, you need to make sure that every state is participating in these kinds of programs and systems, which that just has not happened yet. I think moving forward, making sure that these sorts of issues, there needs to be more funding that's actually being approved to go to state administration. That has been eroded due to inflation over time. The level has not kept up. There needs to be like actual better regulations that the federal government is ensuring that each of the programs is abiding by. But so far we have not seen those changes.
Thanks. Yeah, and I'll say, like, it's sort of disappointing that I feel like there was a lot of folks that are working on this. But Protecting Taxpayers who are Victim of Employment Fraud Act was one example. But like, whenever you're trying to pass a bill that requires some money, you need to figure out how you pay for it. And the most obvious one was any unspent monies left in the American Rescue Plan Act, as you said. But those have now been taken for the use in the debt ceiling sort of thing. So even even if they said, hey, let's go and enact that, they'd have to find a different pay for right now. I'll also add, you respond to Adam Benjamin's great question about how that, like, I'm trying to remember because it's so again, Adam's question was how would the GAO report that came out this week maybe have changed some of the things that in mind? And I think Will's right that, like, we might have, put a little bit more into it on that. That said, I think, my baseline based on some of the previous stuff coming out of GAO and also the DOLOIG was like, I was sort of working on a like fraud, total fraud was 5 to 10% of UI payments. The GAO report now says, oh, yeah, it's a little bit more, sort of around 7%. But one of the things I'll add about that is, as I mentioned, like it's so hard to get your head around the numbers here, because like 130 billion is just a ton of money, but we spent $1 trillion on UI or more. And then like one thing that's been really frustrating, I know for me, is that you get the fraudulent payments, which is a huge issue, sometimes gets a little bit mixed up in the discourse with sort of like what would be called overpayments, right? And overpayments can includes fraud, but also includes like any time any of the paperwork wasn't done perfectly correctly, including a lot of times errors that were made on the side of the state administration. So a lot of the congressional hearings will be like, oh my gosh, it could be as much as 500 billion. You're like, no, that's really not true. But like 130 billion is a lot of money, and it's well worth making sure we do everything we can to both recoup what we can from earlier and to make sure that doesn't happen again going forward. I'll go back to Jen again. So Jen, again, you had wonderful war stories in your book, and I remember when I was reading, I'm like, every time I read a social science book, I'm like, the last chapters, here's the 10 policies that will solve this. I was like, wow, I wonder what Jen's 10 policies are going to be. And you did not, and in fact ended with 10 quick, easy fixes. But I was wondering, could you talk a little bit about really sort of what does need to change so we can actually have sort of these sorts of effective reforms to UI or other big federal programs?
Yeah, I think I kind of went for a capacity answer rather than a policy answer, and I'm gonna stick with that. Since we're just talking about fraud, I think a way to highlight the lack of capacity is in the fraud context is when we were in California, we kept getting, the first thing we did was fight with EDD about the definition of the backlog. And there were the capacity issues that they just literally did not know their own systems well enough to get an accurate, consistent answer. And it was really hard. Like, it wasn't like we just needed a genius to come in. Like, our genius, who really is a genius, took 7 weeks to get the answer because the systems are that fragmented. But, when we would talk about like, okay, so you had somebody apply, they were flagged for identity verification. You sent them a letter. They're supposed to reply to that letter with maybe a copy of their driver's license. They haven't responded, so they're fraudulent. But my colleagues were going around to these offices seeing mountains of unopened mail. I mean, you would measure it by the ton, right? And so that's those responses. So it's just the lack of clarity about what was a backlogged or a fraudulent application was really, really contested. And I think this issue of fraudulent, what's fraudulent, what's just an administrative error, is deeply connected to this idea of what capacity do the states have and what capacity does the federal government have to actually understand what it is we are even doing. We've talked, up front about, the need to just simplify the policy and process. You have in your paper, wipe the slate clean. I'd applaud that. I think it's very, very, very hard to do. But in conjunction with that, I think we just have to look at the fact that, your Social Security, yes, it started in, it all came out of the 1935 Social Security Act. That's, in the years after that is when we built all the administrative capacity, started building the enormous administrative capacity that we have today. And it was a great moment for our country, in my view, because we tackled an enormous challenge. But we are still essentially relying on that capacity, the structures of it, the kinds of people we hire. And we have not asked, really on a fundamental level, what are the competencies and capacities that government needs today to deliver? Part of that answer is what I'll call digital. I don't really equate that to technology, But there's been this idea that that's just not something government does. Digital to this, this ties back to this policy simplification issue, because my definition of digital has more to do with what I talk about in the book is product management. In government, everybody talks about project management. Project management is the art of getting things done. Product management is the art of deciding what to do. And if you're trying to do a real product, like deliver unemployment insurance to people, you have to work with the policymakers to decide what's in it. In other words, digital delivery has a voice in policy, because they're the ones who can say, I mean, they did it a little bit, right? The 600, we can only do 600, we can't do 1%. But like, that's so after the fact. We've got to really bring delivery voices to the policy table to say what is possible, what is not possible, and someone needs to hear them. Nobody is hearing or listening to the delivery people who are saying this just isn't going to work. You can yell at us all you want for bad technology, but with the complex interaction of the systems that we have, the technology policy, the delivery policy, the compliance policy, and the UI policy, it's just unmanageable. I mean, I want to call it Michelle Evermore, because I think she has been saying that, and I just wish more people will listen. But that core capacity to essentially product manage this is invisible in government and needs to be built.
Jen, would you like to expand on what New Jersey has been doing that Michelle has documented that has brought in the digital people into these kinds of improvements?
Yeah, could somebody put a link to Michelle's paper in the chat?
I'll look for that.
So I got the glory of writing an op-ed that's just totally Michelle's work restated. Thank you, Michelle. I got the privilege of going to the New Jersey Department of Labor with her, but essentially, there's a lot of elements to New Jersey's success. And I think in a certain way, I would call the leadership that Jillian Gutierrez and Robasaro Angelo demonstrate essentially product management, right? They're getting in there. So, not to discount, or really to highlight, I think, their incredible leadership. But one of the elements of their ability to overcome some of the obstacles that other states didn't overcome as well during the pandemic was that they had a core team, not just in the Department of Labor, but collaborators from the Office of Innovation that Beth Novak, who was my predecessor in OSTP in the White House, started, that were, people who we're there to really understand how the system works, not just look at what contract would we give to what vendor to fix it, but how can we actually fix it? And it's what I talk about in the end of the book, Matt. It's not a policy prescription necessarily, but we talk only in terms of capital expense generally when we're trying to solve a problem in government. Like, how much money are we going to give to Deloitte or someone else, to fix this, and not thinking about what's the operating expense, what are the core competencies internally that will, sure, they'll end up doing contracting out, but they'll be able to do it right because they know what they're asking the vendor for. And New Jersey's done this really, really well, and we should pay far more attention to not just that they've done that and they had that there, but as Michelle discusses in the paper, all the things that enabled that are just getting better results for the people in New Jersey who need this benefit.
Thanks so much, Jen. And Will has added Michelle's paper to the webinar chat if anyone wants to take a look. The next questions, so we have 8 minutes left, so we're getting to this. Chris, I wanted to make sure you had a chance to sort of talk about some of your plans. So like I said, there's lots of differences between the two plans. One commonality is substantial increase in sort of average benefits. I was wondering if you could sort of give the highlights of your plan and sort of some of the features that you think are most important.
Yeah, well, so mine is probably much more of a, if we started from scratch, what would we want UI to look like kind of plan, rather than trying to tweak the current system. And it basically, you might share this, although you're probably less optimistic about getting there, would be just starting with a purely federal approach. We want people to search for jobs across state lines. We want them to be supported in searching across state lines. We want the money to follow them. We want the funds to follow them. There's really no reason for the states really a priori to be involved in the unemployment insurance program. One of the things where I think we would probably differ is that I really would like to see the unemployment insurance program really be targeted and think of it as a targeted program. How can this be a program for people who can't absorb income shocks by themselves? So I think the upper half, certainly the upper third of the income distribution, has plenty of liquid resources and also liquid assets as well that they can borrow against, is generally pretty able to absorb income shocks. And there really is no need to tax and spend for this section of the population. We should be thinking about how to get the benefit focused on the lower income people and the people who are currently ineligible. So I would basically put a $500 a week cap on benefits. And I would also structure benefits, not with, I would eliminate the tax, the federal tax, which leads the states to impose taxes. I would eliminate the upfront tax and instead have an ex post tax. And so think of it more as a loan program. Think of it more as an income contingent repayment program. So I would have a 2% income tax for anyone who's claimed benefits until they'd repaid the benefit. And the nice things about those numbers is when you think about it, it basically means that any amount that, because of the way that the payroll tax for Social Security lines up with the benefit amounts that I would repay, which would be 50% of income for about 6 months, which is around the current benefit level, it would basically mean borrowing back all the payroll taxes you paid over the 2 previous years. So you would be able to borrow those back, and then you would repay them back later with an income tax, with the 2% income tax. So it would be a much less administratively intense system. It could operate purely really through the federal tax system. And also, it would operate much more on an individual level, which means you could get rid of a lot of the safeguards we talked about earlier in terms of excluding gig workers, excluding farmers and self-employed. It would be for anybody to basically absorb the income shocks to which they've been subject in the past, and they would opt to receive benefits. It would be up to them. So it would really only be people who generally don't have the capacity to use their own assets, financial or otherwise, to absorb income shocks. But it would really be people who are most liquidity pinched, people at the bottom of the income spectrum who would make most use of this. And they would gain a largest sort of implicit interest rates with us. So if you think about it really at the highest level, it would be moving from an insurance system to more of an income contingent loan system.
Thanks so much, Chris. And yeah, I'll add to what you said, like the way, and we didn't talk about this much in this paper. We're sort of planning to write a second paper on this, but like the way UI is financed is such a problem, and it makes a lot of things much more difficult. Some things you mentioned, I know my colleague Josh McCabe has been working on, could we do paid family leave through the UI system, because that's another income shock. You'd think that like UI being sort of like, oh, you're not working right now, like here's some money, is the system that's sort of well set up to do that. But basically the way it's funded makes that really, really hard to do in general, because again, the fact that you have a tax that doesn't apply to things, and then that messes all these other things up in terms of like, what is a gig worker ends up being this, much more fraught sort of thing because of those sorts of issues. We're running out of time, so I had one last question for the panel, and the great thing is it's actually very related to some of the questions we've gotten from the Q&A thing. So, anonymous attendee asked about how do you improve the state federal divide that Chris had mentioned, and David Trimmer said hey, you said that federalizing would be really good, and why do you recommend standardization across states instead of full federalization? So I'll give a sort of brief things to that, and then I'm going to actually turn to Jen to add some bonus commentary. But I think as Chris mentioned, as Jen mentioned, like UI has a lot of sort of weird path dependencies in it. And I think it's it's very hard to sort of take back discretion from the states that they already have. What Will and I have recommended is saying, what the federal government should do is sort of make a system that people can use and then allow states to say use it. Because I don't think states necessarily want to be developing their own, UI databases and websites. So if the federal government has a operational backend that states can buy into or get into for free, that maybe, hopefully sort of get states, especially, your smaller states, your Rhode Islands, your Hawaii's are going to be more likely to sort of get into that, even if some of the larger ones, your Californias, your Texases, might not do it. Chris in his paper sort of recommended full federalization, that this should just be a federal program that's run by the federal government, so that we don't have the sort of mess of trying to make 53 systems work together. And as Will mentioned in his presentation, like that's a huge part of the fraud, is that you have basically criminals are not going to be respecting state boundaries on this, and it's really bad that we have state databases that mean that you can't even track a lot of this fraud attempts and say, aha, this person's getting benefits in Oklahoma and in Oregon at the same time without until a year later. When Jen first read her paper, she sort of said that our plan really is going to be hard to implement, and that you really do want to move towards a federalization. Jen, could you maybe comment on that briefly?
Yeah, I'm a little bit going on gut here, but I think even if you have still state administered, but there's a federal system, you're going to run into significant problems. I mean, when I started working with government, I was working at the city level. And, looking at things like 311 was just becoming a big deal then. So everyone wanted to have like standardized, ways of reporting issues to cities. Like, why should it be, I live in Oakland. When I'm in San Francisco, it's a totally different way to report an out streetlight. Why can't you do that in a consistent way? And someone said to me, when you've seen one city, you've seen one city. And it's true of the states too. Like, they have to integrate with all of these other different systems. If you're still having the states do the payout, you're still going to have like a really, really pretty bad complexity problem. There are others I think who can speak to, and we don't have time to get into all of the different issues that get there, but I think you may be, while I hear where you're going with that, you may end up getting sort of the worst of both worlds there if you try to sort of halfway federalize it. But I think there's, again, like the way to pursue this is to have like an honest, deep conversation with the delivery people. And we just never do that.
I think a key thing to bear in mind is the importance of the tax to the politics of UI. The need to have a payroll tax was why every state except for Wisconsin didn't have an unemployment insurance system before the Social Security Act. I think if you think about why the benefits are set, why they are, why they haven't been adjusted for inflation, again, it's the nature of the taxes that each state are having to impose. And you have some states that are much more willing to impose high UI taxes than others. And that creates a variation that's very, very hard to get past. It's there are some things you can easily persuade states to change their minds on. Persuading them to increase taxes is a very, very difficult thing to sort of make even modest progress on. So I think this is why I certainly see, or certainly is part of the reason why I see just kind of moving away from the existing upfront tax is a way to kind of greatly increase the fluidity of the political opportunities here, because otherwise you're almost asking for gridlock if any policy change requires a tax increase.
Absolutely, and like I said, I think that this is as me and Will started, and we were like, oh, we're going to write a paper that's about like UI benefits and making that, and then we sort of kept on adding stuff, and then we're like, you know what, let's hold off on UI financing and do a second paper that's just on that, because it does sometimes feel like it's the key to unlock everything. So we're 2 minutes past the hour. I'll sort of say, like, maybe we'll end with like one sort of quick final question, but like, what if everyone could just sort of go around and sort of say, like, what do they see as the potential for some sort of big UI reform happening maybe not in the next year, maybe not next 2 years, but maybe in the next 5, maybe the next 10 years. And also to just start, like, one thing I was really super excited to see a lot of stuff that Chris has written on these sorts of things. I remember when I was first getting interviewed by Niskanen, they're like, oh, what else is, what else is going on in center right UI land? And you could sort of find, and I'm sure, someone will point out some great white paper that I missed, but like, there's lots of sort of, oh, here's the critiques and everything like that. But I didn't see as sort of like, okay, here's our big planned reform effort. So it's like, for me, even just the fact that both Niskanen and Manhattan Institute are thinking about this, I've been very excited to see. I don't know if anyone else on the panel wants to add something.
I'll defer to UI experts, which I am not one of, on the reform stuff, and just add that on the capacity issue, which I think is sort of an enabler, in the same way that the funding reform would be an enabler. There is such a dialogue of trade-off between delivery and fraud prevention, and greater capacity in what I call digital gets you both.
Absolutely. We talked about that a bunch in our paper too, is that, you think about, fraud or giving benefits to more people as being sort of, you move the lever one way or the other, but they're both state capacity level things. And, if we're good at delivering UI to the right people, we deliver it to the right people. We don't need to make the sort of trade-offs and accept that, we don't need to accept that 7% of UI funds are going to go to fraudulent actors, and we can do that. We can make that number much lower while still, as Chris pointed out earlier, like possibly extending benefits to people who might not be eligible for right now, like gig workers or anything like that.
Yep.
All right.
Yeah. Sorry.
You go. I wasn't sure.
I think it's hard to see any major reform happening now, but it's also really hard. No one saw the COVID revolution happening either. And I think the trick here is to make sure that when an opportunity comes along, there is a stack of options there, and that there is hopefully not just me, hopefully not just you, but there is some degree of sort of commonality, some degree of overlap between people's proposals and what is acceptable to various politicians across the political spectrum, and what is feasible and affordable. And so having gamed that out in advance and having things that are ready to go when the crisis hits, I think that's the way to think about it. I can't give you a date when that would be, though.
Yeah, no, I think that makes sense. And again, I know my colleague Josh McCabe is on the line, and that's sort of his book on the fiscalization of social policy is basically about that, about what child tax credit or similar things was on FDR's or Winston Churchill's desk when they needed to pull some levers in 1930. Will, do you want to add anything, or should we conclude?
Yeah, I mean, the only thing I'd add is I think the duty to improve the system is on Congress's shoulders right now. We know there will be a next crisis, and like we will be in the same situation again, and they'll hold similar hearings asking, how did fraud happen? It's like, it's because you didn't address this the last time this happened. So you can't be too upset about the extent of fraud when you need to actually send out benefits to people in a timely manner. So if you want to prevent this kind of fraud in the future, you need to make the changes now. And I mean, I think it's important to be very proactive about that, and to make sure that this, like the program, it's unemployment insurance for a reason. You want to make sure people of a range of income levels are protected from unemployment shocks. And right now the system is falling short of that. Fantastic.
And Will has a great piece that looks at like all the recommendations that happened after Katrina, where lots of people in New Orleans and Louisiana had huge issues with UI because everything was flooded. And like you could read the recommendations there, and they're the same as a lot of the recommendations that we have, a lot of the recommendations that Chris has. Obviously there's a lot of dimensionalities on these things, but like some of these core state capacity things, they just come up over and over again. And yeah, I think Chris is right that let's make sure that we have some good things ready to go for when Congress is in a situation where they have to pull some triggers. Thanks so much. It was great chatting with you, Chris and Jen. I got so much out of this. I hope other people who listened in did. I'm happy to answer more questions over email. You can reach me at mdarling@niskanencenter.org. But yeah, and everyone have a great rest of the day.
Congratulations on the paper. It's wonderful.
Thank you so much.